Hello, Maverick traders. Welcome out to your currency recap. It's June 17th. Corey here with you. We're always going to take a look at meaningful news, look at what the drivers are for currencies, for equities, for commodities, for crypto, for everything. And then we're going to highlight our very best setups with a special focus, of course, in currencies, because that's our focus of this area of Maverick.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So as we dig into markets, there really wasn't that much moving today. For this week, there's really not that much going on. So Empire Manufacturing came in at -6. It was expected to be at -12, so much better than expected. Apple announced that they're halting the buy now, pay later loans that they've been doing in the U.S. Does that suggest that Apple sees some weakness coming for the consumer, some weakness in the economy? Obviously, they've got a handle on sales and on how much people are spending and so forth. So that could be seen as a little bit of a negative take, that they must have some concerns about their ability to be paid back. As we look at currencies, Euro had a nice day, yen and Kiwi a little bit lower, but as I said, not a whole lot moving. It was a little more interesting in commodities. Oil with a big bounce back, and oil it plunged and then it recovered, and it's a quick recovery. We're back up to where we had broken down a couple of weeks ago. Oil is more of a factor in terms of giving us a sense of the economy. If the economy was going to weaken substantially, you'd expect to see that in the oil markets. Whereas something like gold, precious metals, they move to the beat of their own drum. They can go up in a bad economy, they can do whatever because they're defensive in nature. Oil is much more economically sensitive to the economy and to growth and to those sorts of things. So nice to see oil with a nice up move. Bitcoin sideways, Bitcoin Cash, Ethereum, Litecoin all trending lower. I would say if you're looking in crypto, as we've said for a while now, Bitcoin is clearly the best of the bunch. Now, the entire group hasn't traded really well recently, but Bitcoin has held up better than most. So as we look at equities, we've been in this uptrend, as we've been suggesting. You just don't want to overthink it too much. Keep riding the wave, keep riding the trend higher. But here's a little bit of a concern that I have. So I always watch for what I would call expanded range candles. What does that mean? A candlestick that's larger than normal. So let me just point out a few of them. Okay. These candles that I have circled are bigger in size than a normal candlestick, right? And bigger sized candles, so if we think about ATR, average true range, that gives us how much does the asset move. Well, the ATR for the SPX index might be in the neighborhood of, let's say, it's 45 points or something like that. Well, then we can compare what's its normal daily movement to how much we actually move today. And today we move from high to low between 54.88 to 54.20 was the low. That's 68 points of movement, right? So today's move was 68 points, about 1.5 times. And that's what I was seeing in terms of the NASDAQ. The NASDAQ 100 ETF QQQ averages about 550 movement. Today it moved $8 and so on, about 1.5 times normal. So again, that's an expanded range candle. That's a bigger move and a bigger daily change than normal. So what does that tell us when these big candles happen? Well, they usually happen at some critical points. I always say that most of what you see in the markets is not something that you can really grab hold of and say, oh, this means that. This means that we're going to reverse. This means, but there are days that stand out, and I would compare it a little bit to a poker player. A poker player watching his opponent, there might be a lot of stuff that that opponent does that gives them no information. But every once in a while, the opponent may do something that they can pick up on, and they call that a tell. That this poker player is giving a tell. Maybe if he has a strong hand, he rubs his nose. Maybe if he has a weak hand, he looks away and doesn't make eye contact. Whatever it may be, there may be a tell and something that someone can pick up on to give them more information. Well, the same thing can be true in the markets. An expanded range candle is a tell. It tells us that there's something happening here that is bigger and more impactful than normal. A lot of times it's a reversal. This was the peak. This was the valley, right? The bottom. This was the breakout candle. This one I would classify as more of an exhaustion territory. So what is an exhaustion? Well, you're extended away from moving averages. You've been on a big run. You already broke out quite a long time ago, a couple of weeks ago in this case, and so forth. So this one doesn't look like a fresh breakout. It looks like more of the exhaustion. Another way to think about this is who's in pain. And if you can identify the group that's in pain, you can identify where they're giving up. They're throwing in the towel. So we know who's in pain. It's the short seller, the person betting against this market and hoping and praying that it will turn back down and relieve this pain and hopefully turn profitable and so on. Eventually, the pain trade, the market will twist your arm until you cry uncle, right? And so the short seller on a day like today is crying out uncle. That's what this big expanded range candle is. It shows you that the shorts are being squeezed, that the pain trade is being inflicted, and it doesn't guarantee that this is the high, but we're very likely near an exhaustion, a short-term exhaustion high. Does that mean that the market's going to collapse? Heavens no. But are we likely to turn down and have a little correction or sideways consolidation from here? Yeah, we're pretty close to that point. So that's my take on today's price action is if you were to just look at this, you'd say, oh, it's an up day and move on. But if you know how to read the markets and you understand that there are tells and that expanded range candles are something I want to pay attention to, when it happens like this, where you've already broken out some time ago and you're stretched away and so on and so forth, those tend to be more exhaustive. So we're likely to stall out and maybe back and fill for a week or two. That would be my take on today's price move. Now, if we look at the rest of this week, we've got the RBA meeting coming out tonight. They're expected to hold on rates. We've got some retail sales tomorrow morning in the US. We've got the Swiss National Bank on Thursday in the middle of the night. We've got the Bank of England out to report on Thursday bright and early. And then we've got manufacturing data primarily in Europe to finish out and round out the week. But you can see 3 central bank meetings: Australia, Swiss, and England, Bank of England, all reporting here this week. Expectations are, again, not really any rate changes or anything of that sort. Now, if we look at currencies, the thing that stands out to me, I'm actually going to highlight right here in US dollar. The most of this is kind of unchanged from where it's been. CAD, I've had this as the more bearish candidate. I've taken off that viewpoint the last couple of days just because oil, like we talked about, oil has been running up. I don't want to be short CAD in that environment, so I'm a neutral on CAD for now. But US dollar looks intriguing, and here's why. We're in a trading range in US dollar, and we've been stalled at the upper end of the range. So the question is, are we heading back to the bottom end of the range? And I don't know that for sure. Frankly, if you come up and break out above this range, that's very bullish. but we have been trending lower. The 20's below the 50. We've stalled out here. The chart looks like we may be headed to the bottom end of the range. And if you go back there again, my guess would be that you'll eventually break the bottom end of the range. So US dollar, it's not so much that I have a strong opinion on it as it's just chart wise. If we fail here and start heading back this way, it sets up for a nice short. The short setup is to play it towards the bottom end of the range and even possibly down and through the bottom end of the range. So that's a chart that I'm keeping a close eye on. We've got bullish markets. They can continue if this rally broadens out, if the industrial sector, if financials, if some of those other sectors can start to pick up some pace, then equities can continue higher. Again, we think that we've seen a little bit of an exhaustion high here in the short term, but that doesn't mean that the bull market's done or anything of that sort. But I would expect some back and fill in equities. I hope you enjoyed today's currency recap. Have a great week, everyone. We'll see you next time.